Hi, I'm John Kosar, Chief Market Strategist at Asbury Research. Thanks for listening to our latest views on the markets. Today I'll be talking about what our latest analysis and data-driven models are saying about current financial market conditions. That is, when to be on offense and where to look for the best opportunities, and when to be on defense and what parts of the market to avoid. Today is Saturday, January 7th, 2023. Let's get started and follow the money. Some of the key bullet points that we will be watching for next week is number one, the S&P 500 is testing major tactical resistance at 3907. This is, as we see it, this is a really important inflection point for the stock market, for the U.S. broad market. If the current downtrend that we are in, the major downtrend that started a year ago, is still healthy and it's still intact, we should see this rally that we've had last week fail at the 3,900 area and start to roll over. A key indication of whether that's going to happen or not is volatility via the VIX. The VIX is currently hovering around 20. Over the past year, a VIX of around 19 has closely coincided or almost immediately led the last four important tactical tops in the stock market. That's kind of where the VIX is right now. If the VIX stays at 19 and starts to rise, gets back above the 22 area, the 23 area, that will be an indication to me that the major downtrend that's been intact for the past year is still healthy and is starting to resume. A couple of other points we're watching closely. Our Asbury 6 tactical model is negative as of December 6th, but through Friday, 2 of the 6 have turned back to green or turned back to positive. If more of those Asbury 6 constituents start to turn green, if we get 4 or more of the Asbury 6 that go back to green, I should say, or turn to positive, that will indicate that we are getting a more healthy day-to-day condition for the market, one that would allow prices to start to move higher. That could be the first indication of some kind of a bottom. So if you're a subscriber to Asbury Research, you want to watch the Asbury 6 really closely next week. It's updated every day after the close, about 2 or 3 hours after the close. If you see 4 or more of the constituents turn green, it indicates the internal health of the market is getting better, and it may be a time to look for some buying opportunities. Finally, our SEAF model, which is our sector rotation model, it currently favors healthcare and financials and is avoiding technology and consumer discretionary. Typically, in a healthy market, you're going to see tech and you're going to see consumer discretionary lead the market. That is not the case now, and it suggests to us, at least heading into this upcoming week, the market is still on a defensive footing. So we'll be watching our SEAF model closely in the weeks ahead to see if there's any indication that the market is starting to move into a more risk-on type of an environment where you're seeing money going back into tech and to consumer discretionary. That's it for this week. Thanks for listening. If you liked our latest views on the market, please visit asburyresearch.com to get our latest free updates. You can visit the Asbury Research channel on YouTube and subscribe, or you can visit asburyresearch.com, go to the contact tab, and enter your email and your name so you can request pricing and services for our premium research. Thanks again. We'll see you at the next one.